process of collecting, processing, and reporting financial information of your business. It's often referred to as the language of business. The transactions that happen in your business need to be captured to generate financial statements which tell a story about your business. Is your business profitable? How much is your COGS, percentage relative to your industry? What expenses does the business have? Is the business in a good cash position? Is the business highly leveraged? What are your total receivables and payables? I could go on, but I hope you get the picture that making sure you are accounting for your business activities is a really important part of helping your business be successful. Let's take a look at some reasons why you need to have an accounting system. For the IRS, you need support for your tax returns. You need to make sure that you're keeping your personal separate from your business, and that you're using accrual basis when certain revenue and inventory thresholds are met. Also, for reporting to your bank, they may be looking for performance. They may want to do a liquidity analysis. They may want to look at cash flow projections and also your collateral. Partner and stockholder reports are another reason to use an accounting system. There's accountability. The statements also show the accumulation of wealth or a deficit, and to keep track of loans for the business. And then business controls is another reason to use an accounting system, where you're monitoring your cash, the business performance, you're going through the planning process, and you're doing analysis to maximize profits, minimize expenses, and identify problems. Now let's talk about cash versus accrual basis and single entry versus double entry. No one may ask you about these terms. However, it's important to have a basic understanding. And your accounting system, if you're using one, which we do recommend, will do all of the double entry behind the scenes. It's also important to make sure when you run and compare financial reports that the reports are on the same basis so you aren't comparing apples to oranges. For cash basis reporting, that recognizes revenue only when money changes hands and is the simplest for super small businesses. Accrual basis reporting match revenue and expenses. So in this type of system, it recognizes when a transaction occurs regardless of when money changes hands. This is most typically used in small businesses and is required in some circumstances based on IRS guidelines. So single entry versus double entry. Single entry is just that. It's a single entry. It's the simplest form. There is no auto check. And an example would be your checkbook, where you make an entry in there and you adjust your balance. You're not putting two entries to make sure that they do balance. Then the double entry is most typically used, and if you're using some type of accounting system, all of that's happening behind the scenes for the most part. And there's an auto check in there. So everything must balance, those debits must equal the credits. We will focus on double entry accrual basis in the examples coming. Let's look at the cash basis or perfect world. This is where you pay for supplies at the time you receive them, and your customers pay you at the time you provide your products or services. For some businesses, this is how it works. However, for businesses that offer terms to their customers and or receive credit terms from their vendors, the timing doesn't match. Now let's look at what typically happens or the real world scenario. For a lot of businesses, they purchase and receive supplies on credit terms and pay for those supplies at a designated time in the future. It could be net 30 or net 60 or some other type of credit terms, but the business is not paying for the supplies when they receive them. A similar situation arises when businesses offer credit terms to their customers. The business provides the product or service and offers the customer terms, so the customers pay at a designated point in the future. Again, the business doesn't receive payment from their customer at the time products or services are provided. Accrual basis allows your business to account for how you pay for supplies and how you get paid.